Hi everyone, in this educational video we will be analyzing the charts of JP Morgan, Chevron, Honeywell, Dollar General, PayPal, Carvana, Unity, Eli Lilly, Roblox, and Alibaba in that order. This analysis is intended for educational purposes only. I enjoy constantly learning about the stock market and trading. I hope exploring these charts will also provide you with some possible ideas to further research or provide valuable insights. Remember, if any charts in this video interest you, you should conduct further research on them. Now, let's begin. So it seems like JP Morgan is forming an ascending triangle pattern. An ascending triangle pattern is generally considered to be bullish. So based on that information, we are looking for a move above $147.53, since that's the resistance. And we are looking for that to occur with strong green volume and continuing to stay over the MACD, since staying over the MACD is usually a bullish signal used to identify upward momentum, while going below the MACD would usually signal a downward momentum, which is considered to be bearish. Anyways, if that move above $147.53 occurs, then the stock could move towards $153 to $158.95. Although, if the stock moves below the triangle, it crosses below on the MACD, that could disprove the bullish setup and could lead to the stock moving towards the lows of earlier this year, which would be somewhere around $123.11 to $129.04. Chevron is forming a descending triangle pattern. In contrast to an ascending triangle pattern, a descending triangle pattern is usually bearish. As you can see, the stock has a lot of red volume and it looks like it may be about to move below the MACD signal line. If that occurs, you could see a decline towards filling the gap between $146.45 and $148.32. However, if it declines past $146.45, you may see a decline all the way towards the reverse point from late September. But if the stock breaks above the descending triangle with strong volume and has a cross over the MACD signal line, that could disprove the bearish setup and lead to a move over $165. Usually, though, it's important to closely monitor oil and gas stocks like Chevron, since they're frequently in the news, which means they may experience sudden positive or negative volatility. Honeywell is forming a wedge. Currently, it's hard to tell which way the stock may move, but overall, it is a perfect example of a wedge, so I think it's definitely worth paying attention to for a potential move towards $217.01 if it ends up moving bullishly, or a move towards $184.23 if it ends up moving bearishly. Dollar General is a stock that I'm continuing to keep an eye on. The stock isn't moving very quickly, but there could be a gradual attempt to fill the significant gap. Also, the stock is trading over the 5-day and 10-day SMA. It is also trading over the daily VWAP line. Plus, on the MACD, the stock is currently over the signal line, which, as we mentioned earlier, is a bullish sign. However, there are a few factors that could invalidate the move back to the $200 range, such as a close below the 5-day SMA with strong red volume or a cross below the signal line in the MACD. Overall, the stock doesn't seem like it'll be making too quick of a move, and it may go sideways or only slightly increase for some time. However, it's still an interesting setup to watch. PayPal currently seems to have a bullish trend. It is trading above both the 5-day SMA in yellow and the 10-day SMA in green, as well as the daily VWAP line in blue. Not only that, but as you can see, the 5-day SMA crossed over the 10-day SMA, which is usually another bullish signal as well. If the stock continues to have a bullish setup, then the stock might begin filling the gap soon. However, a close below the trend zone could invalidate this setup. Additionally, it is important to keep an eye on the MACD, as a downward crossover below the MACD line would be a bearish signal. If that occurs, PayPal may move towards the price level where it previously reversed on June 15th. So if that decline happens, then the bearish target would be around $62.75 to $63.15. Carvana is setting up a nice head and shoulders pattern. In case you are unfamiliar with the head and shoulders pattern, I talked about it in my 5 important stock patterns video, so I recommend watching that video after this video if you want to learn about that pattern. Anyways, you can see the green volume has been increasing and the MACD crossed over. Also, the stock went above the neckline with a strong move above the 5-day SMA and 10-day SMA. Based on all that info, the stock seems to be bullish, So the first target based on this information would be at $30.35 to $30.41. However, if the stock closes above $30.41, then the next target would be in between the Fibonacci zones at $31.42 to $31.59. While it closed below the neckline at $29.14, would disprove this bullish setup and could lead to a decline. Now, Unity seems to be showing a bearish setup. It has remained below the MACD line and came close to falling below the trend zone. Additionally, the last red candle doesn't look very bullish going into next week, so that's something to keep watch of. And it also failed to close above the 5-day and 10-day SMA as well as the VWAP. The bearish target suggests a potential downwards movement towards filling the gap, which would mean the stock moves towards around $37.70 to $38.80. However, if the stock manages to rise above the trend zone and on the MACD the stock crosses above the signal line, it would invalidate this bearish setup and could result in a retest of the high from June 30th. Eli Lilly seems like it just broke down below the wedge it was forming. It dropped below the 5-day and 10-day SMA as well as the daily VWAP, but it is still above the anchor VWAP that starts from the candle before the wedge formed. Although it did cross under the MACD, which is a bear signal, if the bearish trend continues, a move may occur towards somewhere between $445.12 to $446. But if it closes below $445.12, the next target would be $432.34 to $434. However, if it closes below $432.34 occurs, then you may see a move all the way down to $423.87 to $424.50. And if a close below $423.87 occurs, then it would likely lead to the stock continuing to decrease until the gap is filled. A cross back over the MACD and move back up into the wedge could disprove this bearish setup. So, Roblox is currently trading above the anchored VWAP that I set to a few days prior to the formation of that large gap. If Roblox manages to stay above the MACD and closes above $43.01, there is a potential for the stock to reach a range between $44.90 and $47.65. However, if the stock falls below $37.16, it would disprove the bullish setup and could lead to a decline towards the May lows at approximately $33.70 to $34. Alibaba is a stock that has been talked about a lot recently. It was forming a descending triangle pattern, which is generally bearish, but it managed to break over the pattern with a cross over the MACD and with strong green volume. However, the MACD then crossed below after the breakout occurred, but the stock is still trading above the triangle, and it seems like the MACD may cross back over soon, so it shouldn't be too much of an issue. If the stock continues on a bullish trend and closes over the resistance at $94.29, you may see a move above to previous highs made at between $99.17 to $105.05. And if it passes $105.05, you may see a move all the way up to around $115, where it could fill the gap made earlier this year. However, if the stock fails to stay above the triangle, you could see the stock drop to potentially the low 70s range or even lower. I hope you enjoyed this video. For more finance-related content, please subscribe and leave a like. Thank you for watching this video. Until next time, stay tuned.